All right. Well, hello, everyone. I'm John Seroka with Seroka Brand Development and also the Mortgage Technology and Marketing Committee Chair. And welcome to our very special webinar today featuring some of the very best of the Digital Mortgage Conference presented by National Mortgage News. You are all going to be so happy that you joined us today. We have some great speakers from some truly remarkable companies with us. Couldn't be more excited or more proud to have them here today. So be sure that you write down all your questions as we go through this webinar because we're going to have a Q&A at the end. And before we go any further, I want to give a special shout out to my fellow committee members that worked so hard to put this together today. They include Linda Wagner, the Director of Marketing at CrossCheck Compliance, Laura Martell, the Marketing Manager at Mountain West Financial, and Dustin Hobbs, the Communications Director of the California MBA. You know, you just can't make these things happen without good people by your side, so thank you all. All right, so the innovation that has taken place in the industry over the last few years has been truly groundbreaking. It's been led by great thinkers and entrepreneurial minds, some of them who have risked everything to build a technology that is transforming our industry and how we do business. Very smart people. They've created great efficiencies in the mortgage manufacturing process and that have resulted in a much better borrower experience and also great savings in loan production. So I would like to introduce to you our panel of speakers today. And first, I'd like to extend a very special welcome to our featured speaker, Austin Kilgore, the Editor-in-Chief at National Mortgage News. And then we will hear from our special guest speakers today, each of whom will be interviewed by members of the Mortgage Technology and Marketing Committee. These speakers include Bob Brandt, the Vice President of Marketing and Alliances at Optimal Blue, Lynn Cook, the Director of Sales and Marketing at LendingQB, and Kirk Donaldson, the President and founding member of LoanBeam. So we have some exciting people lined up, so let's jump right in. Austin, thank you so much for joining us today.
John, thanks for having me. Good morning, everyone.
All right, so Austin, why do you think digital mortgage technology is getting so much attention right now?
Well, for the longest time, a lot of the emphasis that's been on technology in the mortgage industry is really focused on electronic notes and the e-mortgage, and really thinking about that as a product. And if you're not doing that, then there was almost this attitude of why do anything in between? And really the attitudes are shifting now. There's a lot more focus on the customer experience, even if that includes some of the mortgage process taking place on paper. So where people thought of the e-mortgage and the e-note as a product, I like to think of the digital mortgage as more of a process that incorporates automation and independent third-party data to help streamline the origination process, the application process, and help lenders create a more accurate loan and do it more efficiently and effectively. And then the second piece is that I think the regulatory changes that have been rolled out over the past few years have largely been absorbed in the industry. And so people have had a chance to kind of take a step back, take a deep breath, look at what they need from a non-compliance standpoint, and really reassess the customer experience. And I think that attitude applies to both lenders and vendors who have a lot more time to focus on borrower experience. And really it's a time when customer acquisition is so paramount because of what we're seeing in the market with the shift to purchase lending and the inventory shortages that are happening in the real estate market.
Sure, thank you for that. That makes a lot of sense. Austin, what are the biggest challenges for lenders that want to adopt digital mortgage technology?
So a lot of the digital mortgage offerings that are out there are designed to be complementary to your existing product stack. And so as a lender, you really have to be thoughtful about how you incorporate those technologies into your process. Ultimately, you should be going for improving your customer experience and making your process more efficient. But how does having a consumer self-service point-of-sale application on your website fit into your underwriter's workflow. Also, I think as these technologies mature, there's going to be one of the things that lenders have to think about is how they adopt this technology short-term while also kind of keeping an eye on the big picture and looking at where they want to be now versus 5 years from now. The ball is going to keep moving with this, and you really need to start thinking about how you're going to adopt this technology now and kind of incrementally add new capabilities to your technology stack as it pertains to digital mortgages. And then the last thing I would say is you really have to embrace this idea of automation and independent data over relying just on documents across your entire origination workflow. You don't want to just focus on the front-end application process. You really want to think about automation and workflow during underwriting and all the way through to closing and, really even further secondary marketing and servicing.
Austin, there's this challenge in being able to, that you were kind of speaking to, and being able to apply the customer experience in the application process and, kind of applying that to the closing process as well. Why is that a challenge?
Well, I think there's more risk involved. There's more at stake when you get into the underwriting and closing process. Taking an application is kind of the easy part. It's the low-hanging fruit, and it makes sense why a lot of the startups that have come into the industry, as well as the products that kind of the incumbent vendors have brought to market, have really focused on the customer acquisition piece. So the added tasks that go with underwriting and origination, the data validations, the checks, the workflows, and really making sure that when you get to the closing table, you're able to execute on a loan and get everything, dot all your I's and cross all your T's. That's really challenging and much more challenging than taking an application, and something that as the digital mortgage approach kind of matures will become a bigger part of how the technology is used.
Mm-hmm. And what do you have any insight as to the timeline for this?
I think it's a year's process. I think when you look at what's out there right now, there's a lot of emphasis on the front end. I think how it will mature is that these digital mortgage offerings that really focus on the customer-facing front end will slowly kind of get deeper and deeper into the process to where the point where they hand things off to the LOS is further and further along in the process. But I think it's going to take years, which is why lenders really should be thinking about starting their digital mortgage journey now so that they're up to speed. As more capabilities become available, the stuff that's out there right now is going to be kind of table stakes. And if you're waiting for kind of a complete end-to-end digital mortgage, that's the wrong approach. You really got to take this on incrementally.
Wow, that's some really great insight. What do you see as the biggest misconception that lenders have about digital mortgages?
Well, for starters, the idea that going and buying some sort of piece of digital mortgage technology is going to replace your LOS or your other technology, I think is probably one of the bigger misconceptions. These digital mortgage offerings are really designed to be complementary to your existing tech stack. And while that means that vendors are going to be, asking you for more of your hard-earned revenue, really the ROI is there when you take a deeper look at your origination process and what it's costing you to originate a loan. The data is out there that shows that the cost to originate, it keeps going up. It's at record highs. And so really this is a good opportunity to, even though you're spending some more money to incorporate new technology, finding the ROI there is a lot easier because of all the different options that are available and because, frankly, how expensive it is for lenders to originate loans. I think the biggest misconception, though, is this idea that somehow a digital mortgage is going to replace your loan officers. And I don't see that happening in either the short or the medium term. Maybe way down the road, you might have a loan officer-less mortgage lender shop, but I just don't really see that happening anytime soon. The whole point of a digital mortgage isn't to replace your loan officer. It's about making the loan officer more efficient and more effective, making the application process more accurate and reliable, rather than trying to replace loan officers. And then the third thing that I would say is that in terms of misconceptions, just going out and buying a digital mortgage application, having a consumer self-service application doesn't guarantee that you're going to have satisfied customers. You really have to think about how your entire employee base embraces the technology and incorporates it in their day-to-day. It was interesting. I had a conversation on Reddit a few days ago with some consumers, and we were talking about Mid-America Mortgage out in Dallas, and they have they've kind of developed something that they're calling Click and Close, which is kind of their answer to the Rocket Mortgage. It's a digital mortgage application. And one of the things that I heard a lot from consumers was this idea that they don't understand the difference between a digital mortgage being kind of a fast way to underwrite a loan, as opposed to kind of the no doc, that basically no underwriting loans of 10 years ago. And so I think that's probably a minority of the consumer population. But you really have to think about not just buying this technology and then set it and forget it. You really have to think about how you embrace the use of technology and encourage both your employees and your borrowers to utilize all the advantages.
Mm-hmm. Great. Well, Austin, since you brought up this topic, I want to hit it head on with you. You were talking about the LOs before and the potential of replacing or lack of potential in replacing the LOs. And what I'd like to hear from you is why wouldn't this eventually replace loan officers? Why not?
So I think it's two things. From a regulatory standpoint, the regulators still want a loan officer of record. And unless you start licensing underwriters in the NMLS, the regulators are still going to want a human being who can be responsible and held accountable for a loan application and for a closed loan. So it would really take a regulatory change to create a scenario where you don't need a loan officer. Now, that doesn't mean that your loan officers won't become more efficient, and maybe you don't need as many loan officers, but you're still going to need loan officers. And the real reason that you need loan officers is that consumers still want a consultant. Far too often you think loan officers play this role of kind of paper pusher, and really they should be focused on being a consultant to the consumers, helping them get through this huge financial decision that they're making. And by embracing digital mortgage technology, you're eliminating a lot of that paperwork shuffling and kind of, really stuff that's important but really isn't the competitive differentiator. And when you have the digital mortgage technology, your loan officers are, instead of scrambling around looking for W-2s and bank statements, they're spending more time advising the borrower on their options, and that's going to help build deeper relationships with consumers for the next time they need a loan and for when they need or when they have the opportunity to give a referral.
Yeah, I absolutely agree with you. I think that the key is their efficiency, and that's a big thing that's going to be affected. Austin, what do you think the next big thing or what the next big breakthrough is going to be in mortgage technology?
So now that the digital mortgage kind of front-end application technology is really starting to kind of get a lot of attention and adoption, I think people are going to start focusing on the back-end closing process. That's another borrower experience touch point that could be improved. Quicken Loans is, should be, admired for all the tech advances that they've made over the years, but even with the Rocket Mortgage technology that they've introduced, it's kind of been this open, dirty little secret with Quicken that, for as advanced as their technology is, you still have to close a loan on paper with them. Well, that's changing. A few weeks ago, they announced that they're going to start doing e-notes. And I think that in the same way that, what they did with Rocket Mortgage and how the industry started to embrace digital mortgage on the front end, you're really going to see more of an emphasis on the back-end closing process and improving that customer experience there. And then along those same lines, I mentioned Mid-America Mortgage, and they're certainly a smaller lender than Quicken, but they're very rapidly kind of getting on the forefront of what's happening in the technology world with digital mortgages. They do e-notes in their retail channel, but they also have a platform set up where they're acting as a correspondent aggregator using their e-note platform with their correspondent originators, and you can originate these loans on these e-notes on a warehouse line of credit. And the benefit of doing the e-note on a warehouse line is you can turn the line much faster than you can in the paper world. So I would say these e-warehouse lines of credit and more e-note adoption throughout the industry are kind of the next big thing that people are going to be talking about.
Okay, that's great. I'll tell you what, I have one more question I'd like to ask you, Austin. We're a little bit tight on time, so if you could keep it to maybe about a minute, that would be great. But everyone talks about what it takes to capture the millennial, but is there any talk out there about capturing Gen Z, that forward-thinking companies need to be at least thinking about, if not acting upon?
Yeah, I think one of the great things about digital mortgage technology is that as it advances and matures, the investments that lenders make today in digital mortgages are really going to continue to pay dividends, not just with millennials, but the Gen X borrowers ahead of them, as well as the Generation Z borrowers coming up behind them. The technology will evolve and mature, but really the foundation that you establish now is really going to help serve your needs for addressing the current kind of crop of first-time home buyers and repeat buyers, as well as kind of the next upcoming generation. So it's something to think about, but really what you do now is going to put you in position to be there when the next generation's ready.
Austin, thank you very much. I really appreciate you being a part of our webinar today. All right, well, over to you, Linda.
Thank you, and thank you, Austin and John, for terrific insights into this whole topic, particularly the customer experience aspect. Next, we have Bob Brandt. Bob, I have some questions for you if you're ready. This is Bob.
I sure am.
Blue. Great. Well, I'd like to begin by asking you, what challenges does Optimal Blue overcome for lenders, and what role are you playing in the digital mortgage movement?
Well, thanks, Linda, and thanks as well to the California MBA for inviting myself and Optimal Blue to participate today. And thanks to all of you that joined. I really appreciate you taking time out of your busy schedule to be on the webinar. So what challenges does Optimal Blue overcome in the industry? What is the role that we're playing in the digital movement? The digital movement, as Austin alluded to in the mortgage industry, is all about automation. Automation of the mortgage process, truly from end to end, from lead generation to point of sale, through processing and closing and the delivery of loans. Product and price is very central to every step of that process. Since 2002, our company has provided unique secondary marketing solutions that really facilitates the transactions between the buyers and sellers of loans. So for the lenders on the seller side, we provide a comprehensive solution that makes it really easy to manage all aspects of a competitive offering that helps you maximize your volume and your profitability. That same solution also helps lenders maximize and really manage the risk of their pipeline and deliver to the secondary market through commitments. So what does that mean to all of you? Well, lenders are seeing dramatic benefits from automating their secondary marketing operation. This is something that's been for years a very manual, very spreadsheet-oriented process. For example, one of our clients, Scott Shaw at Pacific Residential Mortgage, shared with me that PRM now sees Optimal Blue and as well as other technologies they use as a profit center, not a cost center, but a profit center In the case of Optimal Blue, driving profits north of $20,000 per month. So Linda, that's really, I think, the role that we want to continue to play for lenders like PRM.
Great. Could you address the solutions that Optimal Blue provides and how those solutions integrate with what lenders are currently using?
Yeah, you bet. So as I shared, our flagship offering is end-to-end secondary marketing technology. We call it our enterprise secondary marketing solution. It's dedicated at automating everything related to secondary, from gathering the content from the investors they use all the way through taking out the commitment with that investor and everything in between. This automation ensures that our clients provide the best fit financing option to each and every borrower every single time. However, the best part of the solution is the API framework we've built around the product. Our solution offers real-time APIs with an extensive network of partners, leading mortgage technology providers in the industry, well over 25. The benefit of this is pretty clear to the digital mortgage movement. So why is that? Well, traditionally, mortgage technology has been held back by integration. People have provided their solutions almost in a silo and have not really embraced collaboration or integration with other providers. This is all changing in the industry today. Lenders can pick today from a wealth of best-of-breed providers with more compelling options than any other time before. So these solutions offer, as you've seen, capabilities across a large spectrum, from lead generation to mobile to marketing to CRM to point of sale, LOS, and way beyond. Some of these things didn't even exist before. So at Optimal Blue, what we're trying to do is break down those silos between vendor partners and integrate through our API directly with those companies. So any of the providers within our partner network can ingest real-time compliant pricing that our clients use and do so across the entire loan life cycle. For example, one of our large clients has just utilized our API to integrate 8 different vendors: a mobile solution, a CRM solution, a POS solution, an LOS, and 3 mortgage insurance providers. So every one of their users, from the consumer to the loan officer to the processors, even to the folks in the secondary desk, are 100% in sync as it relates to product eligibility, pricing, and the lock desk.
That's very powerful. Can you speak to also the recent acquisition of Commergence in Mission Viejo and help us understand what Commergence does, how it adds to your solution set, and how it helps other players within the industry?
Yeah, you bet, Linda. So Optimal Blue provides automation, again, for the buyers and sellers of loans and everything in between. So with our investor clients, the folks that buy the loans, we've always had a solution that we make available to them as well. With our acquisition of Commergence, we've taken our automation capabilities for investors to a whole new level. So Commergence makes it incredibly easy for the investors to identify the lenders they want to do business with, and it makes it extremely automated to onboard and conduct ongoing monitoring of those lenders as required by their own businesses as well as their regulators. So Commergence also, though, helps lenders. By being a part of the platform, lenders can easily establish new relationships with the investor and save a material amount of time to sign up and be a part of that network.
Great. So one last question I have, and this relates to how you describe yourself on your own website. You describe yourself as a digital marketplace. Can you address what that means and why it's important for both lenders and investors?
Yeah, you bet, Linda. So Optimal Blue sees ourselves as a really a true platform, a marketplace that builds an automated bridge between lenders, investors, and the providers that both rely upon. So with over 1,800 originator clients and 300 investors already on the platform, and numerous providers that are integrated as well, our digital marketplace provides real value by automating that exchange of live data, providing good intelligence, and of course, real-time content. However, the real benefit, though, is as the marketplace participation grows, all of the participants benefit from a network effect. For example, our lender clients are more competitive because they have more options from more investors as they join the platform. The investors find automated outlets as more lenders join the platform and make it easy to better serve those lenders. And then, of course, providers benefit as well. The more lenders and investors that are on the system helps them to provide an outlet for their mortgage technology, but more importantly, in just the right product and pricing, the same product and pricing that those lenders use throughout their business. But together, this multi-sided network creates, this platform we call the Optimal Blue Digital Marketplace.
Well, Bob, thank you for those tremendous comments and insights into what Optimal Blue is doing and how it's adding value to this digital mortgage conversation. Next, I'd like to ask Lynn Cook some questions from LendingQB. Lynn, are you ready?
Yes, thank you, Linda.
Great. Well, we touched on briefly the issue of the LOS, and I'd like to ask you to describe your thoughts on the current state of the mortgage LOS, and particularly, what is driving lenders to seek a new mortgage LOS?
Thanks, Linda. Well, the LOS really is at the center, is kind of the nexus of this entire digital mortgage process, right? Lenders need the LOS to actually process and manufacture, so to speak, this loan. And converting the entire process into a digital process means that all these different pieces, from, what, Bob's company, Optimal Blue, offers, from all these other different services, they have to be able to competently connect to the LOS in order for the lender to be able to leverage the benefits of those systems. So what we're seeing right now, in the mortgage LOS market is that lenders are recognizing this, right? They're seeing that their current legacy systems are pretty inflexible and not really capable of leveraging, all these advanced sort of APIs and digital lending capabilities that different providers are offering. So it is somewhat of a state of flux and instability within the mortgage LOS market. There are definitely more lenders, banks, or credit unions that are looking for options to replace their existing LOS because, quite frankly, it's not really meeting the needs for what they want, not only now, but more importantly for the future, right? I think they're really starting to question the short and long-term viability, of a rapidly aging legacy system. And luckily, they do have, some options to consider. And I think what they're first considering sometimes even before the functionality of LOS is, how easy is it to integrate all these different services? So, and on top of that, the other driving factors that are kind of pushing them towards looking at new LOS systems are, number one, you've got obviously regulatory change. That has created, again, sort of a wave of instability, where lenders are kind of questioning whether their current vendors are really keeping up the pace with regulatory change. And then, quite frankly, they're just market forces. Sometimes as in sort of consequence of these regulatory changes, you're seeing that certain LOS vendors are finding that it's not worth their while to upgrade their technology to make it compliant. And we have seen a couple of LOS solutions either be sunset and basically forcing lenders off their LOS, or there have been certain sort of financial instability with certain LOS vendors in terms of acquisitions and whatnot. So this is definitely a season of change for mortgage lenders when it comes to LOS technology.
Well, thank you for that. The next question I have regards APIs, which Bob also touched on. Why are APIs so important to an LOS?
Well, again, I mean, it speaks back to the fact that the LOS is sitting at the center of the entire mortgage lending process. Certainly, any sort of given vendor can, promote their system as being an actual platform, and that is absolutely true. You look at certainly a CRM system as being a platform, or you look at a point-of-sale system even being a platform, and certainly Bob's system being a platform. But from the lender standpoint, I mean, there is one database of record, right? And when you're talking about, the digitization of the mortgage process, you have to have some, some source that you can rely upon, as that, single central warehouse of data from which everything else extends across. And so having APIs, it really simplifies the process of integration. It's not that integration didn't exist previously, right? I mean, for many of years, and Linda, you know this, right? I mean, there have been many different formats and many different methods for lenders to, integrate or connect one system to another. But, what's interesting about the API and the sort of API movement is that it simplifies and it lowers the cost to integrate different systems. And that really is what's driving this whole connection and this whole string of digital services that are really transforming the entire workflow of the mortgage process. So, with APIs being so readily available and communicating very freely, via, web service protocols, basically what you're saying is that, APIs are driving the actual digitization of mortgage lending, right? Prior to this, it was a very laborious process. It was a very start and stop type of process. But now there is actually a true light at the end of the tunnel. It is completely feasible now to see that the entire mortgage process, from start all the way out to recording, can be completely digital. And really, from my standpoint, it's the economics of it, right? Not just that the cost to integrate these different systems is much lower, but more importantly, like Bob said, I mean, this is a best-of-breed environment. This lower cost to integrate means that there's greater opportunity for vendors, right? Whether they're the old school vendors that have been around for 30 years, or you see all these new fintech entrants that have come into the scene. And that's what's really exciting about mortgage technology right now. And I think Bob would agree. I mean, excitement has not always been the name of the game within the mortgage industry. But now, because you're seeing such new and innovative entrants of vendors and services coming into the mortgage industry, that really is kind of making things very exciting for lenders and also for borrowers. And so we really owe it to this concept and the framework of APIs and the ability to integrate very easily to really help drive this process forward and really connect and complete that entire workflow cycle.
Thank you. And it's encouraging to hear you say that there's light at the end of the tunnel. So could you speak a little bit more about the future of the mortgage LOS?
Yeah, the LOS is, let's face it, it's a very large, heavy, and clunky type of system. It has to manage so many different parts of the mortgage process. I think it's pretty telltale that you haven't seen a new entrant in the mortgage LOS space for a number of years. And that speaks to the difficulty, of not only designing and building, but marketing and implementing an LOS system. But, with the, sort of advent of APIs, what it's really doing is it ultimately allows lenders to customize their LOS and therefore customize their workflow at a much lower cost. And so what I mean is that if you imagine that the database of an LOS sits at the center, at the core of a system, and around it you've got a data layer and you've got different functions, right? The API can be seen as this overall wrapper around the entire system itself. And this API it's almost like it's almost like made out of Velcro, right? What that means is that these lenders don't have to simply put up or rely on the workflow and the user interface that the vendor provides with the LOS. The API means that they can actually rip off the user experience, rip off different components of the workflow of that LOS and replace it with their own custom workflow. And so what that essentially means is that it becomes very modular, right? Just like you can bolt on different services via APIs to the LOS, you can also bolt on different workflows, different UIs onto the LOS via these APIs, because these APIs provide that sort of gateway for a lender, whoever you may be, to create that custom workflow, okay, and then just snap it on to connect directly to the functions and to the database of the overall LOS. And so for many, many years, lenders have always wanted that single LOS that is completely customized to the way that they happen to operate. That was a very expensive affair that only the largest banks could afford. Now, with an API environment, that means that your mid-sized lender really does have the option to do that for themselves. And of course, that means they could do it well and they can do it poorly, right? Workflow and UI design is a very difficult thing to get done just right. But nevertheless, what that does mean is that, again, lenders, whether you're large or mid-sized, it's not as expensive to create that completely custom workflow that allows you to really gain the process and efficiency advantages that you've been looking for many, many years.
Well, thank you very much, Lynn, and we look forward to a great future. Next, I'd like to turn this over to our committee member, Laura Martell. Laura?
Hey, Linda, thanks so much. I want
Excuse me, Laura, if I may jump in real quickly. I just wanted to let everybody know that if you have any questions, please feel free to start sending them in, and we'll jump in to those at the end. And with that, back over to you, Laura.
Thanks, John. I'm happy to be here, and thank you and welcome to Kirk for joining us today. Kirk, I've heard a lot of great things about LoanBeam, and I'm really excited to learn some more.
Great. Well, thank you for having me. Thank you for the California MBA for having us.
Of course. So, Kirk, LoanBeam really seems to be setting the bar and standardizing the way that we're processing, and we're really looking at qualified income. Can you tell us a little bit about some of the benefits that lenders are seeing with your technology?
Sure. Thank you. So LoanBeam has been able to standardize the way that qualified income is calculated, from simple income, salaried employees, all the way to the most complex tax returns. Just a few weeks ago, we had a 16,000-page tax return submitted. It wasn't Donald Trump, so everybody asked the same question. And we were able to turn that around in a matter of hours. The lender's words, that would have taken them weeks. And so what I see as a benefit, direct benefit to the lender, is something, in the not only the consistency, transparency, and time, but a reduction in the cost of the overall loan. As we heard earlier, we're seeing $8,900 thrown around as a fee for the overall closing, and what we're seeing as far as a digital mortgage is that direct benefit. The reduction of those costs, we've been able to digest the regulatory issues that have directly affected that cost increase. And I think that what we're seeing as far as LoanBeam specifically is cost reduction in time, effort, the back and forth for receiving documents that are missing on income. And I think that your overall benefit and lift is seen in other ways, where you're seeing resubs go down to zero.
Great, thank you. It really seems like there's some tremendous opportunities there. So I know we talked about this from a few different perspectives today. We talked about the digital mortgage. Austin spoke about it. Bob spoke about it. Lynn spoke about it. Can you tell me a little bit about how LoanBeam is pairing its technology with existing processes? And are you able to see increase in efficiency and process lists even with legacy workflow?
Sure. And I think that, as Lynn alluded to, you're seeing an omni-channel requirement from lenders. And what that means is that you have legacy systems in place that we need to adopt to. And so everyone's rushing forward with digital everything, digital mortgage. And that process, yes, would we like to get first generation PDFs, HTML data format? Of course we would. It's the easiest thing to process. But we live in today. And today we have to be able to accept loans from lenders who a borrower has a fax that they scan, that they PDF, compress, and then send to us. And that's the reality. And so we have a solution that covers 100% of the market. And in the marketplace, I think that you're going to see a gradual adoption of the digital mortgage, a platform and LOSs that can offer both solutions, because we want to solve to 100%. If you're getting digital format for verification for income, for example, 23-25% of the market. If you have two borrowers, that's less than 6.25% of the time. And so we need to solve for 100% of the time. And so what we see with borrowers, what we see in reality, is that need to not completely displace their volume, right, and their revenue, but be able to adapt as a vendor and accept and process as the need presents itself. And we'll all get better. The entire industry will get better. It'll be gradual over time.
Thank you. Those are some really interesting stats you just shared with us. So I wanted to switch gears just a little bit. I heard about a really exciting announcement that you guys just released about Freddie Mac. Can you tell us a little bit about that?
Sure. So a few months ago, we announced partnering with Freddie Mac and their platform to provide a digital solution for income, working towards rep and warrant. We are going to provide them with a self-employed solution. As you see, and people are talking about millennials have a varied type of income that becomes more and more complex as they either own their own businesses or Uber. Any of these things add to the complexity of income. And so what we did was we started with the high hurdle, as it were, and through their new platforms, we're going to offer a rep warrant solution, and we're working towards that as we speak. So we're very excited about this announcement. We're very excited about the partnerships that we have with the top 10 lenders that we see as, forward thinking as far as digital and those integrations and pilots.
Very neat. I'm interested to see how that progresses along. So as far going back to kind of the digital mortgage, where do you see the digital mortgage as its most efficient? And what do you think the impact is going to be, both on lenders and our borrowers? And what is it actually going to take us to get there?
Okay, sure. That's a lot of questions. So at its most efficient, I believe that you have a seamless kind of experience overall. The holistic kind of end game is to be able to have a borrower provide documents. Many people talk about their phone or on their computer, but being able to provide a digitized, seamless process where a borrower can provide those documents. They are processed by either an LOS or proprietary system through companies like LoanBeam, where we are ingesting tax information, for example, and providing the lender, before they see those documents, the first time, with an answer. And so we have a qualified income calculation with all of the required missing documents. Our technology is smart enough to tell you 25% of your income is coming from a K-1. We need the corporate tax return. You're missing part of your Schedule C. You have a rental property that you can sunset it last year, but you're still claiming the income. And so being able to do that all up front without the back and forth through the borrower, without having to make 500 calls and making that borrower agitated, but a very quick response on asset, income. You have companies out there like ServiceLink that are working on a digitized appraisal and title. You have companies like Price or any of the LOSs that are up front working on kind of that seamless UI. And I think that's the end game. And so if you take that one step forward, if you are a borrower, you can submit all these documents. You have a trusted output where you can rely on someone like LoanBeam, for example, where you're as close as the lawyers will say, let me say that we're 100% accurate, right? If you have that trusted number, you can have a super qualified borrower that then lenders are bidding for their loans, or that you can trust to send to the GSEs and get a green light on rep warrant, for example.
Very interesting. Yeah, thank you for that. One last question for you. So there seems to be a lot of talk recently about blockchain. Are you guys doing anything with that, and do you actually see it affecting the marketplace?
I do. I think that, like everything else, it's a hot topic right now. I think that just as everybody's trying to run through the digital mortgage door as fast as they can, this will become and gain momentum, where there's actually a company out there right now that I believe first quarter is releasing the first digital currency for the mortgage industry called Halcyon. I believe that blockchain will be a disruptor. I don't know if it'll be a disruptor in the next year, 2 years, 5 years down the road, but that kind of ledger type of transaction fits perfectly into the mortgage industry. You're dealing with contract, you're dealing with counterparty and counterparty risk, you're talking about reconciling and the fees associated with it. So I think that, like everything else, if you speak to certain people, they'll tell you that everything's a digital mortgage. Someone alluded to it before. We're closing in 100% digital format, less than 1% of loans right now. Now that'll increase. That will gradually get better and better and better. But there's 99% of the market that is not closing that way. And I think the same thing with blockchain. It's exciting. It's new. I think that the digital currency eliminating fees and interest rates is spectacular. So I think it is the future.
Wow. Yeah, that's really interesting. However, thank you so much for joining us today, and I appreciate your insight and candor.
Thank you.
Thank you very much, Laura, and thank you everybody for your participation today. So at this point, I would like to turn it over to the audience for our questions. I understand that we have a couple that came in. Dustin, why don't you read them off?
Sure. Thanks, John, and thanks again to the presenters. Great job, everyone. So if you have any questions, feel free at this moment to go into the question module, and you can direct them either to myself or to one of our presenters, and we'll get your question answered right away. So the first question is actually for Lynn. And the question is, do you find much value in hedge advisory firms being integrated with LOS systems?
Oh yeah, absolutely. I mean, again, we're talking about the exchange of data, right? And right now, I mean, we actually have a couple of integrations with at least 2 or 3 different hedge advisors. I mean, so where you get the advantage is being able to take pricing data, such as pricing data that's generated by Optimal Blue or any other given pricing engine, which we have built into our system as well, and being able to get that data in a much more frequent and real-time fashion to your hedge advisor, because obviously, I mean, they need to balance out their hedges, and the more frequent, the more accurate information they have, the better they're able to situate, your hedge position. So in one end, it's the frequency of the data being able to be transported directly from your lock test to your hedge advisor in one area, and then the other area is in terms of execution, right? Execution, involves a lot of, data entry, right? So being able to have that execution pricing data flow directly from your hedge advisor back into the LOS without anyone actually having to touch it, eliminates a tremendous amount of time and effort that's currently being, put in manually. And as you can imagine, I mean, again, it's facts and figures of pricing data. If you fat finger or you put in the wrong value, I mean, that can really knock you off balance from a pricing standpoint. So, the tighter that the LOS can communicate, I mean, let's be clear. I mean, it's LOS plus the pricing engine, right? The tighter that integration is with the actual hedge advisor, the less time, the less effort, and the more accurate, your hedge position is going to be, and you're going to be in terms of being able to execute on your deliveries, and then whatever else. I mean, again, we're talking about a completely new environment here, right? With APIs being available, I mean, there's untold amount of innovation that can take place that hasn't even been discovered yet. And I think, again, that feeds back into this whole excitement, of what lenders can expect with this whole digitization of the mortgage process. So I think, yes, to answer the question, obviously, yes, there are a lot of advantages in integrating your LOS to hedge advisor.
Great, thanks, Lynn. While everyone else is working on submitting their questions, I wanted to make a note. I showed a slide during Austin's presentation briefly that it's a special offer that National Mortgage News has for us. So, Austin, I'll let you kind of explain what you guys have for us as a sort of a follow-up to the conference.
Maybe go back to that slide, Dustin. There you go.
Great, thanks, guys. Yeah, so if you missed this year's Digital Mortgage Conference, we have videos online of all of the speakers, the keynote speakers, the thought leadership panels, as well as all the demos. We had over 40 demos at the conference. And if you go to that bit.ly link there, it's bit.ly/NMN-DMC 2017, so National Mortgage News Digital Mortgage Conference 2017. That's how you get to the website. There's a link there to buy the videos. And if you use the promo code CMBA, we've set up a discount, 10% discount for California MBA members, just to say thank you for your interest and support. And we hope you'll check it out.
Great, thanks, Austin. Appreciate that. And hey, while we've got you, I've got to ask. It's sort of the news of the day, and you are the editor-in-chief of National Mortgage News. So we'd be remiss if we didn't ask you about what you thought about the impact of the news about Richard Cordray and the CFPB today.
Well, frankly, it's not surprising. I mean, this has been something that we've been reporting is likely to happen for a few months now. I think the thing that hasn't been resolved yet is whether or not Director Cordray is going to be running for Ohio governor. That's long been the speculation. The announcement he made to his staff internally didn't reference kind of what his next plans are, but the thinking has been that he's going to run for governor of Ohio. Now begins the process of trying to kind of prognosticate what the Trump administration will do in terms of nominating a new director, what that approval process will look like, and there are still a lot of outstanding questions in terms of legal challenges to the structure of the CFPB, and it'll be interesting to see how the person that the Trump administration ends up going with, where they see these sorts of legal battles playing out.
Great, thanks, Austin. You talk about hot takes for the hot topic of the day. Appreciate that. So this next question I'll throw out to any of our presenters. I'm not sure who wants to tackle this, but the question is, do you think we'll ever get to standardized mortgage docs like InstaSwaps have and like Mismo hoped? Or is it 10 or more years scanning smudgy PDFs? I'll throw that to anyone who wants to take that one on.
So what kind of docs are we talking about scanning?
I'm sorry?
I mean, if we're talking about verification documents, I don't think that that's the future. I think that when lenders embrace digital mortgage technologies, what Fannie's been pushing with day one certainty, what Freddie's got out there and is coming out with kind of down the line, a lot more of the verification process is going to be done without documents. It's going to be using third-party data. We've already seen some lenders go so far as to not even collect the information from the borrower. The old way of underwriting a loan was get the borrower's information as reported by the borrower and then fact-check it. Well, now some lenders are skipping that step and just going straight to the fact-checker and getting the information and having the borrower kind of click-check through an approval. We found, this is what our independent data sources say about your creditworthiness. If this is correct, click yes. If it's not, prove it. And that'll be kind of the way that loans get underwritten. And in terms of the actual loan documents, I mean, the more the regulators get involved, I think that'll be the extent to which loan docs get standardized.
Any other presenter want to add or throw anything else out with that question?
Well, this is Lynn. I mean, I think standardization, it's kind of a tricky word. I mean, in our world as technologists, standardization is not about the docs per se, but it's about the data, right? And so, it's very promising and encouraging to see, that Mismo, is really starting to flourish. And Mismo is really represents kind of the glue between all the different systems throughout the whole mortgage industry, because, once all different players and platforms, agree, to communicate with each other on a single data standard, it again drives down the cost for systems to be able to connect with each other And in those connections, you got to remember, we're not just talking about, you know, exchange of data. You know, we're talking about exchange of data and exchange of functionality. And that's, again, that's where lenders certainly, and you know, borrowers as well, but lenders really stand to gain, right? Because when you can interface between two completely different companies and systems, you know, for example, we take a look at, you know, what Kirk is offering over at LoanBeam, you know, you do an integration between, say, an LOS and LoanBeam, where LoanBeam is doing something very advanced and very innovative, right? Their ability to, you know, scan and scrape documents and pull data out, you know, with us to be able to integrate with them means that now, with really a click of a button, it means that that underwriter or processor can take a look at any given sort of tax document and just know that, you know, relying on LoanBeam's technology to just sweep in data, you know, at a click of a button, or even better yet, without even hitting a button, right? Because we are talking about automation as being the main takeaway of any sort of integration or connection of a different system. So again, standards are more important along the lines of data. The documents themselves almost become irrelevant, because once you can translate those documents into the data itself, then you've got that working sort of asset to be able to transmit between different platforms. Does that make sense, guys?
Yep. And Lynn, this is Kirk. I'd like to agree with everything you just said. I agree. I think that if you take this a step further with kind of the digital lift and standardization, you know, what we're seeing is one of the key benefits to that mid to smaller lender that you're referring to. Anyone that sells to an aggregator, if you have those aggregators and we can standardize that format for income, then you know that if you sell to Wells or Chase or Freddie or Fannie, that you are mapping, and the buyers of those loans can look at them instantly and say, I have confidence in the way that income or asset or any of the key components were calculated, right? And so that standardization of the forms goes beyond just the format, but the actual content. And I think that that's a huge lift in the industry. It's a huge cost and time saver, and it's a way for the machine, right, to move forward, right? And so you're offloading loans in a more efficient, consistent, compliant manner.
Yeah, I agree with the comments as well. This is Bob. You know, from when you look back at where the industry was and where we are today, you know, the automation has certainly gotten better, which is helping to eliminate the need for printed documents and making that kind of the core part of the mortgage transaction. But as Lynn said, and as Kirk said, that the best part of it all is now these automations that are pretty compelling today are starting to integrate. And that integration, the going beyond just basic integration, but real-time integration of data and content and functionalities is what's going to lead us more towards a live document versus a static printed document.
Great. Okay. Bob, thank you very much. I don't see any other questions coming across. So this will really conclude our webinar at this point. I want to let everybody on the line know that these are some great people representing some of the top companies in the industry, truly industry leaders, and some of the most knowledgeable people I've come across. So if you have any questions, I'm sure they